Recording. And then, so yes, first thing what I want to do is just go ahead and start with just like the weekly chart breakdowns and just the normal, like, outlook that I usually do on the Saturdays. So, let me get this down to one screen and go to daily time frame. And then, if you have any questions anytime, you can just come off mute. It's all good. Okay, so first things first, again, with the daily time frame, again, we always want to start with dollar. Why? Because again, dollar gives us that overlying analysis in the market. If we understand where dollar's going, then we can take that, apply that to currencies, and kind of get a guess on where we think the market's going to go. Also helps with indices as well because we know that they have somewhat of an inverse relationship. So coming into the week, there's a lot going on here, right? We've pretty much been trading in this consolidated range. And actually, if I zoom out and go to the monthly time frame, just so we know, so this is the first call of the month. So I really want to kind of zoom out and just kind of get a bigger picture of where we're at. So we start with the monthly time frame again. Pretty much been in this consolidated range for the last few months, really since, June, where we've been chopping back and forth. But if you look at the overall bigger picture, we had, again, you can call this a double top, you can call this consolidation, manipulation into a fair value gap, and then distribution, right? Kind of starting that uh that bearish cycle on the monthly time frame, which to be honest should be, I mean, this might end up being like a multi-year cycle because I mean this was pretty much started in 2000, what, 22, rallied up here into the beginning of 25, and then broke down here. So, this could really be, bearish on dollar for the next couple of years, long term. Again, it's way too long to kind of like, project things out. Obviously, I like to think about things in more of like a weekly, maybe a monthly trend at best. But if you look at the monthly time frame, really just like the last few months have been really consolidated. You can see here there's just been a ton of chop, and this is again the long higher time frame consolidation to kind of start that next power three rally, right? So when we think about consolidation, we need to be thinking the next thing that we're going to see is, obviously manipulation and distribution, right? So from just a higher time frame monthly level, and again, this could take weeks. It could be, 2, 3 months, just trading in this range. We don't really know. And so I just try to, again, see what are the next levels that we could potentially hit long term, right? And so, again, if you think about this as kind of like the first start of a bearish cycle, right? Where we kind of broke structure here, took out this low, again, consolidated, manipulated into that fair value gap here, the city, and then went lower. Again, we should be expecting that long term over the next couple of years, we should see a run lower, right? So if that's going to happen, we want to think power three again, right? So again, if this is consolidation, and we've been in consolidation long term since June, we're going to probably want to see a run up into some level of buy side liquidity, right? Whether it be, uh, oops, shapes that. Whether it be, this buy side sitting right here, which is the high of this consolidation range, or, again, think back to that pain pocket example, right? Where's the buyers at? Well, there's probably buyers inside of this fair value gap, right? So buyers in there and potentially run up, get that liquidity, and then start to continue down with this overall bearish cycle, right? Now, again, because this is such a higher time frame, I try not to. I look here, I'll check here maybe at the beginning of the month, the end of the month, because it's so big that I mean you can't really trade this. I mean you can trade this, but you're gonna need a lot of liquidity, right? Just to, say, oh, I'm gonna short it when it hits here. Well, the range could be all the way up here, and it could take months for this to play out. So you could be in drawdown for months. And this is kind of how higher time frames or higher institutions and hedge funds look at the market. They're looking at a weekly and monthly basis. They're not looking at it from a day-to-day basis for the most part. There's different firms kind of specialize in different things. But in some firms are very short term, like my seconds, they're looking at second setups, and some, a lot of the bigger firms, because they have so much liquidity, they're looking at things on a weekly and a monthly basis, right? They're trying to hold trades for 6 months. So their goal would have been like, how do I catch this down, right? And be in this trade for, a year or something like that. So ideally, what I want to see here long term is, again, for bearish, we got to grab some liquidity coming out of this consolidation, right? And in theory, it needs to be buy side liquidity so we can take that liquidity and distribute to the sellers, right? So I'm either thinking maybe we run this high, maybe we respect consequent encroachment of this gap, maybe we trade back up into this fair value gap long term and then start to head down. But we could be 6 months just trading back into this gap, right? So again, I want to make sure that we are kind of keeping this what it is, just a higher time frame, and not trying to take a trade based on this time frame, but just again giving us some frames of reference. So with that being said, if we jump down to the weekly time frame, you can see that this is a lot of chop, right? Which is reflective of what we just saw on the bigger time frame. And so in this chop is going to be basically our playground for the next, few weeks at a time. And I'm going to get rid of some of this so you can see a little bit clearer. Um, so again, there's levels here that are kind of important that we need to pay attention to that are probably more important than looking at the bigger picture right now. So if we look at the weekly time frame, what just happened? Well, we came down to this low right here, right? We swept this liquidity here. I'm gonna clean this up a little bit better. If anytime you guys feel like my charts are too dirty, just let me know. I'll kind of delete some stuff. So we came down to this old low here, right? We swept this liquidity. You can see that we formed this low, went down there once, twice, three times, and immediately rejected. And not only did we reject, we inverted this fair value gap too, right? So what is that saying to me? That's saying to me that the market is bullish, right? Because this is just basically a reverse of our setup, right? We ran a liquidity and we violated something that should have been respected, right? So this CIVI should have been respected. And coming into last week, I wanted to see the market do something like this, right? We're trading into that and started running lower, and it didn't. So that's letting us know that we picked up all the sell side liquidity that we needed to have, right? We came down here, grabbed sell side liquidity. And this is not the level that we need to trade to, at least for buy side, right? So where am I looking at for targets this week? On the weekly time frame, you got to ask yourself, if we're running higher, then we're running towards liquidity. I'm gonna get rid of this, just again to clean stuff up. Um, but you got to ask yourself, if we zoom in on this current price action here on the weekly time frame, what's the liquidity that we're resting, or what's the liquidity that we're trying to run towards, and where is that going to be sitting at? Well, there's going to be buyers over the previous week, right? So again, ESL, because the market has shown that we're no longer interested in chasing sell side. And at least if we were, then we would have respected this, right? So we're on a liquidity inverted fair value gap, which is basically what this is at this point. So now we got to start asking ourselves, where's the buy side that we could be running to? Well, now I'm looking at here, right? We know there's going to be money sitting above last week's high. When we think weekly and daily highs, we know that there's going to be money sitting above those, right? And so again, a lot of times you'll see me frame out a trade, and the trade will go to the high of the day, the high of the week, the low of the day, the low of the week, the low of the 4 hours, right? These higher time frame levels where we know there's going to be liquidity resting. So again, when the market runs that, inverts this, I got to start thinking here. So initially, this is going to be our target. We could run higher than this. And if you look for this week, again, maybe I'd like to see something like this, right? Or we take out this high. It could run higher. It could run all the way back up here, right? To this high, right? But when I'm making these projections, I want to be as conservative as possible because I don't want to overshoot. Because my whole goal is I just want to find one or two good trade setups in this range. If I think the market's going to come down here, form the low for the week, maybe retest this inversion, and then trade to here, this is my range for the week. And so this is kind of like my like this area right here, right, is going to be my weekly range or my projection range. And that's where between this low potentially and this high potentially, I just want to be able to find one good trade setup. Obviously, we don't trade dollars, so I'm just using this as a frame of reference, but it's like this with every asset that I trade, right? Um, so I'm really just trying to identify maybe one, maybe two good trade setups. And if we get an extended run and maybe we take out the next week's high, which is sitting up here, cool, awesome. Or this high, cool, awesome, right? But I'm very conservative with that because again, I'm not trying to overexpose myself to the market. I'm just trying to find one or two good setups a week. If I'm trading 3 days a week, most of the time, 3 to 4 days, then I'm only gonna really probably have really 2 or 3 days worth of good setups. So the other thing that I'm noting here too, as we jump down to the daily time frame, is that we did respect this daily civvy here too, right? So ideally, in theory, with this wick and us respecting this, we could see things run lower. And this is why you have to look at multiple time frames to get a better understanding of things. So what I want to see is how the market reacts. If we start trading below this fair value gap again, on the retest, let's say, the week starts out, we're bearish, we start running back down. We find ourselves closing days below here, below this range, and kind of respecting it again. This would be what I consider a reclaimed fair value gap. If the market inverts it and then starts trading back below it and closing it and respecting it, then my bias would shift back down to being bearish. So it's almost like, again, kind of like support and resistance, and how this is treated. Um, and so really just kind of depends on how we are respecting this. But as of now, I kind of have to stick with this idea that the market's going to run higher. And also noting, I didn't even notice this in the weekly time frame. This weekly high is sitting right here, and that's the target. But if you look just above it, there's a very, very small fair value gap from that low to that high. So that kind of strengthens the idea that the market could be running there. And it might not be a long-term bullishness, like it could just hit this level and then fall back over and respect the bearishness that we want to see. you know? So again, I'm trying to work within a very small confined range because if you over project, then you open yourself up to hold things longer than you should. If we think about the monthly time frame again here, right? Like, I mean, the market potentially, I mean, over the next few months, we could see the market trade all the way back up here. We don't really know yet. But I have to stick with, again, what's going on in the next 3 to 5 days. Where can I actually find an opportunity to make money, right? And this is that monthly fair value gap. So maybe we could run all the way up here. We don't know. But I do know that we're going to run for some liquidity in this range, and that's my focus for this week. If we get an extended run, cool. Maybe there's another opportunity. So again, just trying to frame out what exactly I want to see from the market this week and maybe over the next week or two, and let everything else kind of play out as it is. I can't over project. Anything could happen, right? We could go to war next week. We could, the economy could crash, CEO could resign, die, whatever, and it throws the market off, right? Like, so I'm not trying to overshoot. Because at the end of the day, like the market is based on liquidity, and liquidity does have the right to be moved. Like if liquidity is just orders in the market, so people do have the right to move their orders. And that changes the game. So, uh, okay, so jumping to Euro, I'm not gonna spend as much time on monthly time frame, but again, Euro is just inverse, right? So you can see this consolidation here, and we broke structure to the downside here. This is that gap. We consolidated, manipulated up and then down on the dollar. We did the opposite here. So consolidation, manipulation, you know. And so ideally, maybe we would run for, this fair value gap or this whole this monthly level here on the bearishness, or maybe even retest this level here, this high, which would be a breaker right there. So don't really know. Again, this is months out, and we could spend all of 2026 just trading down to this cap, right? That's kind of beyond, again, the scope of what I care about for this week or this month. Um, so if we look at Euro, again, apologize for the dirty charts, but my charts are dirty because I'm actually trading these. So if you look at, get rid of some of this stuff. If you look at what's going on with current price action, even if I just get rid of everything, you see we are in a consolidated range. And right now, what I do notice is that the initial high that's set here, right? The initial low that's set here. Again, anytime you think about consolidation, you need to think about where's the buy side and where's the sell side resting, right? Because again, it doesn't matter what the time frame is. All consolidation is just I'm just trying to bait people to put their orders above the high and below the low, right? It's usually what traders do because they want to play both sides of the range. They want to get lucky, right? So you'll see a buildup of orders of people thinking long. You'll see a buildup of orders of people going short. That's all consolidation is. So let's see. So when we talk about again, what we're looking at in this range, if we think about where we've been coming or where we've been trading from the last few weeks, the last few months, pretty much all of 2025. Um, it's been bullish, right? So ideally, I want to see this market continue to go higher. There are a couple things that we are gonna look at really quickly, though, that are gonna break down, what might happen in the short term, where we might be running. So let me just clean this all off. Start over. So again, Euro futures, this initial high right here and this initial low right here. It's going to be where my buy side, sell side liquidity is resting, like my major pools, right? Above the high, above the consolidation low, or below the consolidation low. So immediately I'm thinking buy side here, sell side here, right? There's obviously other levels, right? You got sell side above any high or any low, but these are like the major ones that stick out. Um, doesn't mean that we couldn't just do something like this, or we couldn't run this low right here, boom, and then go right up without touching the sell side low, or the opposite, right? Like take out this high and then go lower without touching the higher buy side or sell side, but just again, just trying to figure out where exactly the most money is going to probably be resting, right? Like where people are going to put their stops at. And if you ever have like an issue trying to figure out where the biggest pools of liquidity would be. Obviously, there's tools people have like depth of market, which shows stuff, but more importantly, you can kind of just logic it out and say, like, where would I put my stop loss? If I was short on this, where would I want to put my stop loss at? So I knew that maybe it would have the best chance of not getting hit, right? If I was selling, it'd probably be here, right? Or if I was buying, it probably would be somewhere in here, right? Below this low. So when we look at the inverted fair value gap right here. Right, this is also very similar to what just happened on dollar. You can see here, not only did we invert this, we gapped to start the week, right? So there was a gap there. I just want to note that uh, because it really makes this stronger, this inversion stronger because again, there's kind of like multiple layers of like, I guess, quote unquote resistance, right? Um, so I just note that out and I'll say something like volume balance. It's like a new week opening gap or a new day opening gap, whatever. And so ideally, what is the market telling us at this point, right? Well, if we inverted this gap, right, and we gap down to start, it's probably a great chance that the market's saying it wants to keep running for sell side. Why? Because if it was going to respect the buy side here, it would have respected the gap. So what is the market telling us? Well, we came out, ran an old high in this buy side level here, and inverted this gap. What does that mean? That means we probably are no longer interested, at least in the short term, in chasing buy side, right? It means the market's trying to tell us it wants to run lower. So now I'm thinking, okay, well, where's the next level of sell side that we can run to since we're no longer interested in buy side? Well, sell side here, right? Sell side here, below this low. This is kind of like a little trend line liquidity. So I'm just gonna say this, but I would be looking at all three of these lows kind of individually. Um, and sell side there, right? So sell side versus all three of these levels, again, are areas where the market could run to. Best case scenario, we take this. uh, um, you know, I'm sorry, easiest case scenario, we'll take the closest one that's closest to it. Best term, best case scenario, we'll take this. Or I guess worst case scenario, we'll take this. Best case, we'll take that, right? So again, I try not to over project. Uh, and I'm looking at the market here. I think this is current price is sitting at 1.1666, so 66 to here is like 40 points. So this could potentially be a good setup, right? If we think about the market and think about the idea that the market could run bearish for the week, right? We think about power three in the weekly profile. What we want to see, consolidation up, manipulation, and then distribution for the rest of the week, whether it be here, last week's low, which is right there, there, or there, right? So we want to see the market pull up, retest this inversion, ideally stay below consequent encroachment of this inversion, and then start to run lower. The higher this pulls back into this inversion and still respects this, the better it is for us because the range gets bigger, right? So now, whereas this becomes a 40-point trade or a 40-point range, it now becomes a almost 100-point range. And so now within that 100-point range, I'm just trying to find one, maybe two setups, to call it a good week, right? And if we get something crazy and we start running to this low, which I think because we inverted this, I think long term we will get here, um, at least here. Um, then that's just bonus, right? For this week, if we do find a good setup. So that's ideally what I want to see here. Um, and there's also when I'm thinking about these trades, I'm thinking about where we are in the week, where we are in the day, obviously in the daily time frame, but then also where we are in the month and the year, right? So when you think about that power of three, um, when you think about that power of three, right, that plays out on any candle in any time frame, right? If you look at this candle here, this is a yearly candle, right? This is last year's 12-month candle, so this is all of 2025's trading. What happened? We opened up, we consolidated, we manipulated, took out last year's low, right? We know there's going to be some sell side under that from a big institution that only thinks in terms of yearly time frames. Came down here, ran last week's low, picked that liquidity up, traded to the high, right? Taking out buy side above here, and then closed back into the range. That's power three in a nutshell for last year. So if we're thinking about this year, and where we're at range wise, again, it's the beginning of the year. So what are we going to be doing if we think the market's going to be bullish long term? Um, what do we think is going to happen? Well, we're going to consolidate, manipulate down, find some level of a low, whether it's a month low, a 5-month low, whatever it is in the bigger time frames, and then start to form the direction. So in theory, all we're doing, the first couple months of the year is really just picking up liquidity, right? And trying to pick up that bigger time frame liquidity. So it's kind of like trends and trends and trends. So I don't want you guys to focus too much on that, because again, it, yeah, I mean, your head will hurt. Start thinking about all these time frames. I kind of say that like it's like gears on a clock, right? Like, if you open up those old school grandfather clocks, you see like 30 or 40 different gears turning all at once, but it all kind of works for the purpose of moving the hands on the outside of the clock, and the hands on the outside of the clock is like the year time frame or the month time frame or whatever time frame you're actually looking at. And everything else, the minute, the 5 minute, the 15 minute, the hour, the 4 hour, the daily, they all kind of exist for the purpose of moving those hands. So, um, but again, I don't want you to get too caught up in that because you'll start to lose focus and try to start taking positions on the monthly time frame, and it's not that we don't have the type of liquidity to be doing that. You need millions and billions to be doing stuff like that to make it worth your while. Um, but what we can say is again where we think the market's going to run for this week. So jumping down to the daily time frame, we did invert this fair value gap here. There is the secondary one that we're trading in. So ideally, what I'm gonna want to see this week is how we treat this gap. Can we pull back up into here? Can we respect consequent encroachment? So I'm just gonna say to C, CE, uh, shoot, respected. I want to see CE respected. And then also this gap, if we're going to be bearish, right, then I'm going to want to see this BISI inverted. So I'm just going to say want to see inverted, right? So if we start trading and it's Monday or Tuesday, and the market's trading back up here or something like that, like towards the high end of I guess technically now this is an inversion. I try to make all my inversions like orange or, you know, yellow, just so I have a different color. Greens are always BISIs, reds are always SIBIs. Um, but now, if we find ourselves trading, it's Tuesday, Wednesday, Thursday, right? And we're trading towards the high end of this gap, or you're not respecting this gap anymore on to the downside, then it's letting me know that um, maybe my bias here for going lower is off, and this was our overall draw on liquidity here, and we're just going to start running back up. So I'm taking these things and I'm using these things as tools to see where we're at, right? Before we even get into our actual setup of the 15-minute, 5-minute time frame, power three, New York continuation, right? So I probably spend more of my time on these time frames. So by the time I go down lower, I already know what I'm looking for. I already know what I want to see. If we start respecting this and we get to consequent encroachment and it says I don't want to respect consequent encroachment, it keeps running higher, then on that day, then maybe I'm changing my bias and I'm saying, okay, actually coming into New York, I do want to see a consolidation, manipulation lower in Asia and then somewhere in New York looking for the pullback so it can run even higher, right? you know, on that New York continuation. So everything really starts here. And I would probably say you should probably spend like the majority of your time on these higher time frames, right? I mean, like I've spent what 30 minutes just on these two higher time frames, the daily and the 4 hour, and haven't even really gone into like a setup, right? So the more you know here, the more you can see here, the more you can frame out here, the more it's just going to make your job easier. Because this is what's always gonna matter the most is what's going on the higher time frame. That breaker structure you saw in the 1 minute or the 5 minute doesn't really matter unless it lines up with what we want to see here. So that's there, and I'm gonna try and get through this real quick. These next couple really quickly. 6B. Let's see. 6B. Okay, so same thing with 6B, which again is British pound futures, again GBP USD. Oops. Give me 1 second. So what happens when you do stuff in real time, your computer be messing up, and I don't know what's going on with my computer lately. Um, all right, so when you look at 6B, again, same idea here, right? Um, it's gonna it should be lined up with what Euro's going on, has going on. So we think about, last year what happened, same idea. It wasn't as clean as Euro, but we consolidated, manipulated down into this gap, and then spent the rest of the year running up higher and consolidating the rest of the year. So if we go down to this daily time frame, we can see a little bit of a different story here. We didn't fully invert the gap that we did on Euro, right? And so talk about SMT divergence, right? Again, most people talk about SMT when it has to do with like NASDAQ and ES, but it's really for any correlated pairs. Um, any correlated pairs that should be moving in the same direction or moving opposite of each other, right? Like whatever the relationship is, when you see one do something and the other one doesn't in relation to its relationship, then that is SMT, right? So um let's see. So real quickly, see if I got 6EH. Let's start. See. Okay, or whatever. So really looking here, if you look closely, you can see that the market uh inverted its gap here right there, but did not invert its gap on euro or on pound. What's the weekly? Where did my things just go? Am I tripping? I thought I had just marked this up. Okay, but maybe this one. Whatever. Okay. Anyway, so looking at your GBP, um, you can see here that the market did not invert its fair value gap the way that it did on euro, right? So this is something to be watching, right? Like our job, honestly, as traders, is really to be like almost like we're just collecting data, right? We're just trying to figure out what's going on and make a good, accurate description trade based on that. So ideally, what we should be looking for here, especially if we jump down to the lower time frames, is now that GBP did not invert its fair value gap, but euro did, we just need to be watching and making sure that the market is really heading towards the levels that we wanted to. And so really how what I'm gonna lean on heavy here is dollar and seeing which one is flowing in line with dollar. But ideally here we would see this, run lower and continue to go bearish just like euro is. Um, yeah. So let me go to Nasdaq and we'll talk about a little bit about that. I'll actually let me hit on gold real quick. Go back to one. Go gold. I'll do gold, then I'll do the indices, break down these trades, and then, any questions that anybody has, we're good. So gold again, we know that long-term gold is gonna rise. We are in like crazy turbulent times, right? So my long-term bias is obviously for gold to keep running higher. I think coming into the last couple weeks, I wanted to see a short-term bearish run on gold, which was this here. We basically took out these highs and then formed, inverted this fair value gap. Got a lot of rejection from this. So last week, I wanted to see the market continue to run lower and maybe trade back to this level here, which was a weekly fair value gap. Again, long term, don't think it's going to run bearish, right? Like, and so that was kind of what I wanted to outlined to everybody is just that even if we did have a bearish week or counter trend week, we probably wouldn't long term, um, short this. But we didn't get that, so that happens. And so basically, what happens is Monday we gapped up. By the end of Monday, we've almost fully inverted this gap, retested this once, twice. Notice that not only did we dig back into this fair value gap here? But we tested it once, twice, three times, and each time we were taking out sell side. All right, so that's a little trick, especially when you start dancing in gaps. You'll notice that the market will set that gap, trade into it, and then before it really takes you out, or before it really takes off in your direction, it'll come down one more time. And what is it doing? It's trying to stop you out and grab the liquidity that's sitting there. Because if we're seeing this market as a potential market that might go up after the first or second wick back into this fair value gap, then there's probably millions of other people that are looking at this too. There's probably a lot of liquidity there, which is why it comes down, runs down, and then goes up. Um, so yeah, so there's a couple actually, if you break this down to the 15-minute time frame, there's actually a couple good New York continuations in here. This was Thursday. You could see the low being ran around London, and then London's low came out, took out Asia's low. Then we came down one more time in New York and took that out, and then spent the rest of the day reversing. Here's an example of our Asian range consolidation being extended through London, and then London's low came out at NFP and took out all the liquidity, but still consolidation, manipulation, distribution. One of the videos that I want to make this year and just have it up on either the YouTube or the channel talks about the daily profiles and how what to expect, if London is consolidating, or if London comes out, runs the lows, highs. Because there's really four different things that'll come happen out of Asia, and you just want to be prepared for all of them. Not all of them are going to cause you to take a trade, but you know, as long as as long as you have a great understanding of what's happening out of Asia, then you should be in a good position to be, to potentially anticipate what's going to happen. So let's run and look at Nasdaq. Oh, my bad. Let me to go back to gold. So what do I think is going to happen this week? This is pretty much trading at the all-time highs here. So the only thing I can really do and project is the market will take the high. Um, so we inverted this fair value gap pretty much. So jump down to the 4 hour time frame. Maybe like best case scenario, maybe we retest this gap one more time, like come back and retest it and then take things higher, kind of pick up some sell side. There's a small fair value gap right there. So I didn't look at news, but maybe there's like a news release that causes just a like massive sell off, not massive, but a sell off enough to the point where it trades back down there, picks up that liquidity and runs higher. But here, this is obviously pretty close to the highs. So if something like that doesn't happen, or if there's not a clean trade between, the market open and here, then this might just not be one that I want to participate in again. Even though I think the market will keep running higher, I mean, I just need some level of buy side to target. If there's no targets, then I don't need to be trading, right? That's for any situation. If you don't have a target, you can frame out an entry and exit. You really shouldn't be taking the trade. Um, okay, so Nasdaq. Looking at this, I've actually taken a lot more trades on Nasdaq recently. I'm trading, the pairs that I'm really focusing on this year are going to be obviously GBP and pound, but really opening myself up to all the indices, and really just kind of using that power theory. We'll talk a little bit about some of the trades that I've taken this past week in a second, but looking at Nasdaq, there was a couple things that I wanted to see happen this week. And one of them was just the market run more bullish. I think we're back. I think the volume is back. Obviously last few months, towards the end of that at post Thanksgiving, Christmas holiday, the market really starts to slow down and you really start to see it chop where it set this initial high here uh back in October and the low here in November. And really we had just been trading in a wedge pattern. We're still technically trading in the wedge pattern. Um here and here. Now, I don't trade these. You guys have heard me say this a million times. I don't trade wedge patterns like by the bounces and sells off of them or anything like that. I just use it as an opportunity to kind of take a step back because I used to get chopped up a lot in these, right? I used to try and really extend and buy past, past the top of the wedge and try to sell really past the short of the wedge. And I used to get stopped out a lot. I used to get back a lot of money and chopped up in this. And that's really on any time frame, daily, 4 hour, or whatever. But I really just put these on there now so I can see like what's going on, right? And maybe if we're approaching the high of this, then I'm not going to try and go for max leverage, right? Um or my max trade, right? Or from approaching the low, maybe I'm just going to look for the closest level of liquidity. So I'm not really like trading or buy and bouncing off these, but just really using these as like, uh, bumper ramps to just, or gutter lanes or whatever, to, make sure I don't do anything stupid. So daily time frame again, what happened last week? We came 7th, we started here. So going back to Monday, originally I thought we might run lower and because we had inverted this gap, this daily gap. We did not get that. And so pretty soon, like I think by the end of Monday, I kind of figured that the market was gonna continue to, go run higher. Initially, I thought we might, take these levels here. And then once we took this, then we would bounce back up again. it's hard to be like very, very long-term bearish on indices because the point is for it to go up. And ever since, whatchamacallit's taken office, um, the market has really, been a lot more volatile and a lot more bouncy. You kind of have to be you can't really, you're not really getting home runs. You have to really map out your entries and exits pretty cleanly. Um, so I thought we were going to get something lower, but we didn't, right? And so we ended up, by the time like Monday was over, I pretty much figured that the market was going to start running higher. And so I ended up taking a couple of trades. I had two really good trades this week on Nasdaq. But coming into this week here, um, we took out these highs and closed just below this high. So what am I looking at as I clean this up? I'm just gonna do this. So what am I looking at this week? Well, I would like us to get over this high. We rejected it from it again, this most recent on Friday. I would love for us to close above this high. We did kind of engulf this candle here. So I want to see potentially something like this. The market trades back into this 4-hour fair value gap here. And then at least, I mean, the first target obviously would be last week's high, which is right there. But long term, I'd love for us to start trading back into, well, I might have a few levels here. The first level is going to be last week's high, which is this range here. Right. So if it's like Monday or Tuesday and we find a good setup from maybe this fair value gap to the last week's high, then that would be the first setup. The second setup I'd be looking at is I'm kind of interested in this volume imbalance. It's sitting way back here from October maybe or November. So I think that could be another area. We're still trading. Technically, all this price action here is happening inside of this bigger fair value gap here. So just to kind of give you some context. Uh, so kind of do have to be careful with this because we keep wicking into this and rejecting. Um, so I wouldn't be surprised. Conservatively, I'd like us to see take last week's high, and then maybe I'd have to be flat because I don't want to keep buying into this fair value gap, right? I mean, it's a civvy, so in theory you should be shorting this. So I could see us running these highs, and then I probably would be flat until we either invert this or it just shows us that the market is going to reject this level altogether. And we would know that by us inverting this gap and trading below it. If we find ourselves trading below this, then we're probably going to keep running lower. And if we find ourselves trading above this SIBI here, then we're probably going to run to that gap. So just kind of playing things by ear and seeing if I can catch a good trade again. Obviously we know that this is just the preliminary stuff. We want to make sure that we really are following that New York session continuation, which adds just another layer of like, certainty as we take the trades. So that's NASDAQ. I'm gonna look at ES and I'm actually gonna put both these up next to each other. Um, so you can kind of see things together. But you can see here on NASDAQ, and a lot of times, especially since I have these charts up on my computer, I can see these a little bit better than I am when I'm just looking at my actual computer screen when I have versus having them up on a bigger monitor. So a lot of times you'll see me, especially in the lives now, I will have both charts up because I'm just really looking for divergence and I'm looking to see which one is which chart, whether it's Euro or Pound or NASDAQ or ES, which one is giving me the best setup for the day and take that. And that could be like one had a cleaner run of liquidity, one didn't want to go lower, X, Y, and Z. So just seeing that kind of helps you avoid some situations. So I'm gonna get rid of this. At least get this off the daily so I can show you what I'm talking about. Oops. So some channels. Team chat. Okay, just making sure I didn't miss anything. Okay, so um looking at the daily time frame, you can see here on ES again. I like ES slightly more than I like uh NQ because it closed above this high, right? Notice actually, yeah, notice this high here. It was set on the day after Christmas. ES closed right above it. Nasdaq failed to go above it. So this could mean that the market wants to keep running up. It also could mean divergence, right? Like there's more liquidity above this high that ES had to get versus what Nasdaq had to get. Nasdaq didn't even take out the high that was set on Wednesday, right? It failed to take that, and Nasdaq even took that too. So it took both of those highs. So that could mean that the market just wants to keep running higher, or it could mean that Nasdaq is has a liquidity it needs before it wants to reverse and go lower. I would probably guess that because the market strongly engulfed this candle, the market is probably going to keep running higher, and this probably makes this one a little bit safer to trade, yes. But we'll know when the market starts opening up, obviously on like, Monday or Tuesday when I sit down and take a trade. A lot of times that Sunday night open or that Monday trading, it just disqualifies any idea that you had, and it kind of makes it a little bit easier to read. Um, anyway, so if we go to the 4 hour time frame, you can see the same thing opening up on ES that we did on NQ. And so ideally here, what I want to see is the market run a little bit higher by trading into this fair value gap. And I'm going to be conservative with this because at least on on NQ, we are trading into a big 4 hour SIBI right there, right? So in theory, the market should reject this and go lower. And it's already rejected once. Look how rapid that rejection was. Once it hit that fair value gap, it tanked. Um, so just being careful at these levels here and making sure that you know exactly where your targets are, right? If my target's going to be the high last week and I'm in my 15-minute, 5-minute time frame looking for that continuation trade, then I'm out there, right? I'm not holding on to this trying to hope and wish because you're trying to hold a buy into selling, areas where the market should turn around and grab buyers and run lower, right? So you don't want to hold trades into these zones and hope and pray. You should have a target and managing that trade as the target as it runs towards the target. Like you guys know, there's plenty of times where I take these trades and like they don't hit the full target, but I am able to get something out of the trade because I manage my stop loss. So again, just doing all that stuff. So ideally, I want to see the ES trade into this right here. And respect it and go higher. That's obviously I'll be looking at last week's high as the initial target. That level is like 7,017. So long term, this is actually the all-time high on ES. So yeah, I don't like that because you're kind of selling into the all-time highs or buying into the all-time highs. So it's you just gotta be really careful again. Especially since we ran the all-time high there. So coming out into Monday, if we just immediately invert this, then maybe we're gonna sell off and run a little bit lower. So just watching this gap and how the market reacts in this gap. So yeah, so that's ES. Another thing too, I mean, with these higher time frame plays, since this is a 4 hour fair value gap, and we're probably not taking that trade on this time frame, we're probably on the 5 minute to 15-minute looking for our setup. It's okay to wait until the market really starts to turn around in this gap. Like if you catch this, if you get a good understanding of what you're looking for on lower time frames, you're probably going to see something like this. It's gonna come out. It's gonna come out of Asia, consolidate, come out of Asia, manipulate, you know, um, start the first leg of distribution and look for our New York concession continuation. It's okay to take the trade on the right side of the V, right? Like where it's, you know, it's already started to respect this gap and trade up before, if you feel less confident shorting that or shorting it, if you feel less confident buying it, when it's giving us the continuation in this gap, you can wait for it to finish. And that's the same thing with any time frame, like the 5 minute, 15 minute. If you feel more comfortable taking the trade when it starts to show you that it's already respecting it instead of just blindly shorting it, or blindly longing it at once it hits the gap, you always can do that. Some of my best trades were actually late because I would, let's say this is the 1 minute time frame. I would have missed it trading in here and it was already here. It was already trading out here. But I knew based on, it respecting this level that it was going to keep running up, right? So finding a good, maybe continuation opportunity in that run, um, you can still do stuff like that. So, it's really just having once you have a really good grasp of the concepts, I know that again, once market trades here, my bias is higher, it should respect this and keep running. So just because you missed the initial target of the gap, or you might not feel confident enough to just blindly long it or short it, once it touches, then you can wait for a little confirmation. But that means you also have to decrease the amount of money that you're trading with. You can't just, long it with the same amount, right? You got to manage your risk. Okay, so the last thing is YM. So YM, go to the daily time frame. YM is pretty much, I mean, there's not really too much I could project here. I mean, again, it's kind of an all-time high situation too. We did take our all-time highs the last week on Nasdaq. We were basically trading at 50,000 for the first time ever. Um, Going down to the 4 hour time frame, we already started waking off of this and respecting this initial fair value gap. We did run this low. I would imagine that we're probably going to take the high, and we might take the high really early in the week. I see something like that. So, but either way, this is my overall target. Whether we trade down a little bit to start the week off and then run higher, or trade higher to start the week off and then run lower, I'm looking at the all-time high to get touched, basically. So that's kind of what I want to see this week. So. Okay, cool. So that's all I got as far as trades or as far as projections go. I'm gonna go through really quickly the two-ish trades that I took this past week. Actually, I think I traded 4 days, 3 or 4 days last week. So let me pull these up really quick and pull them up. And then if you guys have any questions at all about just the trades or um, just anything in general concepts, we can talk about it. So. Again, my goal with this call is to kind of compress both the weekend calls that I was doing in one. That way, it's like I'm not making everybody kind of like use their entire weekend trying to keep up with what I'm doing. So, um, 8 to 5, pull this up. All right, look at my journal. I put a copy of the journal in the chat, um, basically to show you guys what the trades look like. uh, for this past week, but you can see a little bit. I'm gonna share it here just so it's on the video. But you can see here, this was basically the last week of trading. I did take a trade on Friday when the market opened up for like a very small win to start the year off. But I think overall this year we're sitting at like about 4K in profits so far on the Tradeify accounts. These are the funded accounts, the straight to live fundeds. Um, I think I still got a little ways to go before I'm qualifying for the actual payout across all five of them. But basically, all five, you should be able to take out 3K per withdrawal. I think they take like 90, you keep 90% of that 3K or something like that. So a little less than that. So maybe 2,700 per account. But last Friday, there's three good days of trades. I pretty much traded every day last week now that I look at it. But Monday took a loss for 200. Tuesday was 1.3. Wednesday was 995, so just shy of 1,000. Thursday lost 1.4, and then Friday came back and made 3 grand on Friday. Um, so overall, like a decent week, 2 bad trades. I think maybe if I could have probably managed the loss a little bit better here, and I'd probably be a little happier, but pretty good overall. Maybe that should have been like 1,000 at the most, across all the accounts. So, um, let me pull up the actual trades though. So I took trades on Tuesday, Wednesday, and Thursday. I'm trying to remember what trades they were. So oops, pull this up here. Okay. These were longs on NQ at 10 o'clock. Okay, cool. And then, oh, these are right here. And then yesterday was 6E. Okay, cool, cool, cool. So Tuesday, let's look at Tuesdays real quick. So 6E on Tuesday, I think they were shorts because the whole week was shorting, basically. So let me get this up here. 6E, Tuesday, yeah. So basically coming into the week, obviously you guys know that I was looking for bearishness. And when we look at our continuation model, there was a couple things. And I'm gonna pull up 6B just so I could have it side by side because it's really how I'm looking at both of them at the same time to decide which one I'm gonna trade. Uh, so usually on a given day, I'll have both of them up. And then even after I take the trade, I will keep one up so you can see exactly like what, how the other one's moving and if there's any like changes or anything like that. So, and how they're both flowing in relation to dollar. But Tuesday, so yeah, so Tuesday I took the trade on euro because again we had a bearish bias. I wanted to see the market run lower, right? We talked about that already. The Tuesday market, I wasn't, where's it at? It's Tuesday right here. Yeah. Okay, cool. Was it 6B that I took? Let me go back here. My bad. It's not the right one. Here. 6B. 6A. Okay. 6B. So 6B, or 6E was the one I took. And I ended up taking this based off of our New York session continuation. I saw that 6B ran. And honestly, 6B was probably the better trade. You came here to Asia, and I saw this Asian range kind of being very elongated and trending. Usually, like the best Asian range setups are going to come when the market is kind of like spring loaded, where it's like very tight, even consolidation, right? If you find it ranging, then most likely it's not the most ideal setup. So a tight consolidated ranges, kind of like this, where the market is just kind of consolidating, or there wasn't too many like last week. Um, we came up here. What happened, right? Right, it came out of Asia, ran buy side liquidity, right? And then traded lower. And so by the time we got to 7 o'clock, we were here. Now I took this on Euro, but I had both of them up at the same time. So I figured, once the market came up here, ran these highs coming out of the 7 o'clock window, right? We came back up here, ran this, wicked off of this, and I shorted Euro here, about in this range here. So it ran up and it was playing with me for a while and then took off and went lower. But the basically came out of this 7 o'clock. I saw this consolidated range. We came up, ran these highs, buy side liquidity, and then gave us our setup, breaking structure there, and then technically respected the fair value gap. There was a couple times where I was going to get stopped out, um, but respected all that, thankfully. So that was 6E on Tuesday. If I go back to, is it this one? Yep. On Wednesday, it was NQ was the trade, and I think I took it at about 10 o'clock. Yeah. So one of the things that I'm doing a lot on my NASDAQ trades, there's really a couple things that I'm really looking at. Um, let me get NQ and ES up here. A lot of times I'm waiting on that 4 hour candle to form at 10 o'clock. At 10 o'clock forms a new candle. And so I can look at the 4 hour time frame and see, okay, where most likely what's our draw on liquidity for the next 4 hours and what are we running to? And is that lined up with what I want to see? Um, so that 10 o'clock hour, go back to Wednesday. This is Thursday. This is Wednesday. Boom. So Wednesday was a very clean power 3 day. Um, if I zoom in here, it's this day right here. On Euro or on ES, and then obviously I took it on NASDAQ right here. So what was I looking at? Market opened up here. Really just want to focus in on this range. So coming into the day, we had a bullish bias, right? We talked about that already. The market came out, pretty much gave us a clean, running a sell side liquidity by taking out these lows. So by the time I got to the terminal at 9:30, I saw, okay, cool. We had already ran lows in London, started to turn around. Right? New York, obviously, this is the 8:30 line here, but New York is the market open was here. And with Nasdaq, I'm really lately I and honestly like last 6 months or so, I'm not going down to the 1 minute time frame and taking the trades. I just kind of as I kind of like keep getting better as a trader and I really am focusing more on the stuff that makes me more emotional when I'm trading. And for me, everybody's going to be different. But I get less anxious and I'm less anxiety driven when I can take a step back and see the whole chart, right? Or see more of the chart. And so for me, that 15 minute, that 5 minute time frame, I'm waiting for the setup, the same setup we're looking for on 1 minute, 2 minute, 3 minute. I'm just waiting for that same setup to play out. And it takes a little bit longer. It's usually right after 10 o'clock instead of looking at things at like 9:50 or 9:30. But basically looking for the same setup that we always look for here, right? We came, ran sell side. The bias was bullish, right? So that was the first and foremost important thing. Came down here, manipulated, took sell side, started to distribute, right? So consolidation, manipulation, and then distribution in London was when we started it. And then another run when the market opened up, right? And so if we look here, you can see the market opened up at 9:30 here. It causes some imbalance. It almost looks like you missed the move, but you just got to be patient because what did it do? It opened up a 15-minute fair value gap, right? So the whole trade was taken inside of this range, and I was just patient to wait for that 15-minute setup to respect. And you saw we went down there once, we were down there twice, and again, this is just what I was talking about earlier when price starts dancing in those gaps. You think you're good, right? The initial trade into the gap it sets the low, right? Then it sets another low right there, and then right before it takes off, what does it do? Right? It comes down and wicks you out, right? And so that's why we have our stop losses outside of the gap, right? We put our stop loss either conservatively, the low end of the fair value gap, or low, right? But because you're trading this on a higher time frame, you can't use as many contracts. If this was the 1 minute time frame and I was entering somewhere in here, I might have had a full contract or two on NASDAQ here. But here, because the time frame is so big, I'm only really using like 3 micros per account, right? Really making sure I can manage my risk because it could trade all the way back down here before it turns around, right? And so you got to manage your stop well, right? But once it did turn around, if I go down to the 5 minute time frame, I wonder if I could see it a little better. Yeah, right there. So trading into that gap, I mean, you could see it, it's the same thing, but once the market started engulfing, I mean, it's pretty much, you pretty much saw it. The highs were getting higher. We started engulfing old candles. It came down there one last time to take it. Noticed it tapped consequent encroachment on both attempts. I actually thought we were going to run down there, and we didn't. Um, but again, if we're entering basically somewhere in here, I'm in drawdown this entire, being in this gap. And so once it turned around, we were good. And then I think my target on this trade was somewhere like one of these standard deviation levels. So right there, which was the old previous high or something like that. So it wasn't a huge trade. Um, but in terms of like points, but it adds up over the accounts, right? If you have multiple accounts, then it's good. Um, and obviously you can see there's the wins there. The last trade I took was actually on Friday. I typically try not to trade on Fridays because I know most likely it's going to be a counter trend week. And this is the reason why. So coming into Friday, again, if you think about what happened last week on NASDAQ, and I'm just going to make this one, make this one screen. If you think about what happened last week on NASDAQ, it was a bullish week. It was very bullish, right? And if you think about, again, our power of three on our weekly profile, right? Which is just basically how power of three plays out over the course of the week. We always want to start the week with consolidation, then we want to manipulate, then we want to run higher, form the high for the week, and then go trade back into the range, right? So how it shows up on a candle, it's going to look like this, right? Actually, it probably looks something like that, where so it'll look something, let's just say this, like this. I'm not going to win any wars from like artistry on these candles. Um, all right, so something like that, right? So this is the body of the candle. This is the high, which makes the wick, right? This is the low end, which makes the wick, right? This is the consolidation of the opening price, wicks down, right? So if I get rid of it, the candle looks something like this, right? So when we think about this, Sunday, Monday is really going to be our consolidation manipulation day, right? Somewhere between Monday New York session and Wednesday New York session, I want the low of the week to be created in a bullish week. Obviously, opposite for a bearish week. But between somewhere between Monday and Wednesday, I want to see the low formed, and I want us trading back over that weekly open. Then we're going to form the high, right? Trade away from that for the rest of the week. Usually on somewhere between Thursday and Friday, right? It's going to be the high of the week. And so because of that, usually Fridays I'm going to expect to be a counter trend day, right? So usually Friday, Mondays and Fridays are, you can usually bet that they're going to try and be bearish, right? And so coming into the week or coming into the day, I was open to trading, and I said that I would take pretty much a bearish trade, right? And so coming into the actual session, right, if we back things up, one of the reasons that I was bearish on the day, in addition to just coming in with that knowledge, was that when we looked at Asia, we could see here cleanly that the market was working the highs, right? It worked the buy side liquidity, which lines up with, potential bearish power three. Right, so we came out, grabbed buy side liquidity, not only above Asia, but what else? We took out the high of New York yesterday, right there. And I think we even took out the high of Thursday. I could be wrong. Yeah, pretty much took out the high of, or very close to taking out the high of Thursday. So when I came into this trade, I saw basically all this liquidity sitting below these lows, these lows, these lows, and we really have been working the highs, right? So we came out immediately out of Asia, worked the highs, and it's pretty much spent the entirety of London chasing after higher highs. We opened up at 9:30, I believe. Let's see. Yeah, we opened up at 9:30. Uh, or well, we didn't actually. Let me fast forward this. We opened up at 9:30 and immediately dropped down, right? And so I put this in the chat on Friday because I saw all this liquidity here, right? Below the lows, below the sell side, these Asia lows, these London lows. And I was like, okay, these are untouched. And so if we were going to do anything on a Friday, then most likely we were probably going to take this and run lower. And my targets for this low were last week's, or not last week's, was Thursday's low. So the previous day's low is what I thought we were going to hit. So down here. And so when I called this out in the Discord, I said, "Hey, I want to see the market run to low of day on the high end, and I think the tight take profit was like 20,620 something or 630. And then if we get an extended run here, right? And again, the reason I didn't necessarily wait till 10 o'clock for this was we immediately took this high and then broke structure right at 9:30. So I was like, okay, this is most likely going to just keep running lower. So let me take this trade now. So this is what it was looking at as I was getting in was something like this. Maybe even I think based on the 5 minute time frame. So something like this, like I think is right here is where I entered the position at. Because I was like, okay, cool. We ran liquidity. We inverted this. We are trading so high above Asia, right? We kept grabbing buy side liquidity. So we've been grabbing. So all this was just one big manipulation to me. This is the day that we should be going bearish, right? It's counter trend day. So this all lines up with this being manipulation and not the real move. NFP just happened at 8:30, which caused this huge run up, and we inverted all that. So I'm like, oh, this is money, right? Like we're gonna keep going lower. And so actually ended up taking the trade, and just to show you, I think I took it like somewhere around here. We can kind of watch this together because this was a good lesson here. Uh, sorry if that blasted in here. So stop loss was going above the high of the day, or at least the high of these fair value gaps, which is about the same thing about the high of the day. So So what am I thinking in this standpoint? Well, I'm looking at these lows. Obviously, each of these lows have sell side liquidity, right? Below them. But where I'm really thinking about the market getting to is the low of the day, right? Because again, if we think about that candle example, um, market opened up. Asia's midnight open is right here, right? So we had this midnight open right there. Oh, I'm sorry, I guess where the midnight candle is, right? That'd probably be where the midnight open is. So midnight opens up, right? It runs up like this, right? This is our manipulation. And what I want to happen is the market, oh shoot. What I want to see is the market really trade down to at least the low of the day and probably the low of yesterday, which is down here. So ideally, what I want this candle to look like by the end of the day is something like this. We run up, manipulate, pick up all the buy orders here. Now we got a bag full of buyers. We want to distribute them to the sellers. So I want this wick to look something like this for the day, or this candle, this daily candle needs to look something like this. Huge wick like this comes all the way down here. At this point, the candle's red, right? Because this is a bearish day. It's running all the way down here. Maybe it takes that and then wicks off of it for the day. And so if you take a step back, the daily candle looks like this, right? That's what the day looks like. We ran all the way up here. We traded below. Not to mention the last piece of information here is that what was going on in the 4 hour time frame is here we were trading into this order block. But if you have ES open, which is why I had ES, kind of keep them all together and keep them open just to see what's going on. If you keep ES open, ES was trading. uh, It was respecting this 4 hour fair value gap right here. So I'm monitoring all this. And again, this is why you can't be emotional while you're trading. Um, or over leverage, because if you over leverage, it's going to tend you to lead you to be more emotional. You're going to be so focused on the needle going up and down that you're going to stop taking in information and stop looking at things. So I was looking at this. So I noticed that the market was respecting this 4 hour fair value gap right there. And it was respecting that range. And if you go down to like the hour time frame, I think there was another one too. So I'm looking at both of these charts and I'm trying to see what is the correlating asset here, right? And like what direction they're all moving in. So there's a lot to take in at once. So again, the last thing you want to be worried about on top of all this is, am I gonna blow my account? Am I gonna blow my account? Like you need the peace of mind to know that like you can focus in on what you're actually seeing on the charts because your heart gets to going crazy. You start looking at the P&L, you start peeking at it, then you start making decisions based on the money versus the charts. And that's how you blow accounts, but it's also how you leave money on the table. Um, and there's been plenty of times where I look so much at the P&L, I stop looking at the charts, and man, I leave like $1,000 on the trade or something like that. So either in either situation, it's not good. So you can kind of rip that in the bud by not risking too much. But anyway, so ideally what I wanted to see is the market drop, right? And so initially what we got actually, if I rewind this back, you can kind of see it already, is we inverted this 5 minute fair value gap just again to show you what was going on. So at 9:30, broke structure there. That's where I shorted initially, right? So it was there targeting these lows, right? And so what happened is we actually had some news, I think, traded back up into this gap. It was really kind of spooking me a little bit because I thought I was going to get stopped out because my stop was above this highs. But what happened here, we inverted this gap and notice how the market never actually trades back above consequent encroachment, right? So it inverts this, it trades back into this, it wicks, and it looks bad. Like it looks bad for a couple minutes, right? But it respects it and then obviously not only respects the concept approach, but then starts trading, starts respecting the low end of this, which is an even better sign, right? Because now this is looking like really clean market breaking market structure. If I go to like the 1 minute, I'm just gonna do this because there's a lot of candles here and I need to show you, I'll show y'all everything. So at this point, my target is here, and again, my target is there at the low of the day. My first initial target is there, but I think we could potentially get down to the low of yesterday, right? Because again, we need to be thinking where is the liquidity at, right? And the biggest pools of liquidity are going to be above and below the daily highs and daily lows, and the weekly highs and weekly lows, and the 4 hour highs and 4 hour lows, right? Those three are the ones that we need to kind of be looking at for targets. Um, and so what happens here is now we invert all of this and we respect the low end of that fair value gap and we just start running for the low, right? So at this point, I'm geeked because I'm well into profit and the trade wasn't that long. So it's going to go back up. It's going to retest this. This is the 1 minute, right? This is just exactly what we were talking about just a second ago. It's retesting the low end of that 5 minute fair value gap. Trades up into that 1 minute. I was nervous, crazy nervous here because I'm definitely down, thinking I'm about to get stopped out.
Where was your stop, Blake?
Above the high of the day.
Oh,
So, yeah, right there. Usually if I can't, um, because I'm trading on bigger time frames, the 5 and 15 minute, usually the logic here is like, again, you want to put your stop in a place where you know that if it gets hit, then the overall idea is wrong. You're just not like being cheap and trying to like, um, just protect, your money, but you really want to put it in a place. It's like, okay, man, if it keeps running up here, most likely it's going to keep going higher. Um, and so But because, again, higher time frames, or bigger, so it's not a higher time frame, but a bigger time frame than I usually would take the entries on, like the 1 minute, 2 minute. Instead of that, it's on the 5 and 15 minute. So you gotta size down. You can't have, this is like one full contract, and it's probably what I would have taken if I was trading on the 1 minute. But because I'm trading on the 5 to 15 minute and managing that position based on that time frame, it's got to be a lot smaller, or else you're gonna blow a lot more money. So again, we saw all these rejections from here, so this was good. I saw the market. I mean, at one point I was up pretty much almost at the target, and it came right back down and took me out. And there was nowhere to really move my stop to, right? Because I know that's the next question is like, you could have probably moved your stop and managed it, but there's nowhere in this range from this high to here where I really could have put my stop on that initial run. We can't, when we got here, then I could have probably moved it down a little bit to there. But on this initial rundown, there was nothing. It just happened really fast. And so I'm looking for order blocks or I'm looking for new fair value gaps that I can kind of put my stop behind. Just to, in theory, something that should be respected. So the market respects it. Oh, well, the market respects it, and this pretty much happened really, really fast, to be honest with you, based on this time frame. And it got down to the low of the day. It took the low of the day, which is what I wanted to see happen, to the low of Asia. And again, my full target was here, but I started seeing it wick off of this, and so I decided to just close it out. One, because it was Friday, and two, I mean, we technically had hit like the low of the day, so that was probably like the initial target, the safest target that we could have hit. Um, I could have waited for this one, but again, Fridays, it's counter trend days, take what you get. And when it didn't just run right through, if it would have just like completely melted and it would have been, taken that low and kept going, then I probably would have tried to either move my stop all the way down here so I would have had a lot locked in, or I would have just, let it run. But the lesson here really is again, try not to over project, right? And sometimes taking the safest exit is the best move because what ended up actually happening, and again, one of the reasons that I don't trade on Fridays is because in theory, the market should give you a counter trend day, but you're still shorting the market too. You know what I mean? So like you're shorting a week that was bullish. So it's never a guarantee that the market's going to keep doing what it, it's going to short for the day and call it a day. So what ended up actually happening is what I thought was consolidation, manipulation, distribution was really just the market coming back down to the low of the day, grabbing sell side, and then running back up for the rest of the day. And that's basically what it did. It took off for the rest of the day, which if I was thinking about this from the opposite perspective, or if this was like a Tuesday or Wednesday, me seeing that, I would have went crazy, tried to long it, right? And it probably would have been a great trade. I probably would have made three times what I made, that day. But again, because Friday, I'm thinking counter trend, this is the setup that I wanted to see technically. Um, I was thinking more of a bearish setup. So either way, it's a good trade either way, but it goes to show you kind of like the dangers of trading on Fridays. Because there's a world where I could have been stubborn and tried to hold for this, and I would have been wiped out really, really quickly. So you have to be when you're trading on the days that are counter trend, you have to be very agile because you're not really trading with the trend overall. You might be trading for the trend for the day, but you're not really trading with the trend for the week. And there's always a chance the market